Guys, Austin the Money here. This is my first week that I'm taking a loss. It is a very small loss. Um, so basically, I'll explain what had happened real quick. So I entered in Google, I would say right around, I don't know, whenever market open was, probably right around here. Bought into Google, sold my in the money calls. I was a little aggressive. I sold the $200 calls, which is a little close for comfort for me. I should have did the 195 or 197.5s, but I ended up doing the 200s and I sold $200 cash secure puts. And honestly, I'm not sure why I did this Monday. I think I just went into the Monday trades with an absolute blank of a brain. And anyways, I entered the Google trades. And then, Google had fallen a little bit. And come Tuesday morning, I thought to myself, oh shit, like we have Jackson Hole coming up. And that tends to be a more bearish meeting than bullish. Obviously, not this time around. But I was worried about what he was going to say about inflation. So what I did was I took a L on Google. It was a little over $1,000 loss. I got out of my trade probably right around here, around this 201 mark. And I entered in some healthcare, which Eli Lilly specifically, and then the healthcare ETF with the remaining capital I had. And then Google continued to sell off. And I was like, oh shit, I'm glad I did this. I'm looking like a genius right now on accident. And then, of course, we bounced right back over 200. And then the meeting absolutely went phenomenal. And yeah, anyways, I could have made around $2,400 this week if I would have just stuck with Google. But I caught myself getting a little greedy, right? I mean, trying to get over $2,000 a week is a bit extreme, and it's kind of unrealistic to have those expectations, especially when the market is near, like, at all-time highs, Google stock specifically. But let me go to the thing, right? Oh my god. Give me a second here. All right, so you come in here. I'm down 620, or so we'll just say 630 on the week. These are all my trades. I ended up buying a few shares of some companies just because I was thinking long term. Then I was like, I kind of had a change of heart because I was like, let me wait until we get a really good dip in the market before I start making a long-term position in this portfolio. I'm going to stick to trading and wait till we get some really good dips. So I closed out of Ali for a very small loss. I closed my put on the healthcare ETF so that I could go into Google basically. I got out of my Chipotle for a small $24 gain. Closed my FICO share, which FICO is actually doing really good now. I really kind of want to own this long term. This company is damn near a monopoly on the credit score sector, and it's kind of crazy if you guys look into that. So Google, right? I made a ton of money on this cover call, and I was like, you know what? I need to be safe. So I closed it, and I ended up selling the 195. So that would bring my premium down from like 2,300 this week to like 1,300 this week. And then, I don't know, I just had a change of heart. I was like, you know what? Let me close all this shit out. And I also had some SoFi puts because I have remaining capital. And I try to use all my capital. So I closed pretty much everything out. And what I did was I bought 200 shares of LLY, sold a 87.5 cover calls, got 427 back from my L because this was well over $1,000. Made 427, then I sold a put, made another 223, and I sold a few more puts, made 45 more bucks. So, end of the day, we lost 630. Could have been up 2,400. So, a little sad to see that. The portfolio is right under 150K now. We are at 149,862. But since the Fed was very, very dovish and we don't have any crazy data coming out next week. I will probably go back into Google, just because next week, I mean, everything's pretty bullish right now, and there's no data that can really turn the market next week. Nobody's speaking, no data comes out. That's, extremely important. September 5th, which is the week after next week, we do have the job claims, unemployment, jobs numbers, and all that. So that is something to look out for. But if we go to, I'll just do it on here. I like it better. If we do it to Google, I'll probably be looking to doing my in the money strat. So probably gonna do exactly what I did last week and canceled. Probably end up my in the money strat. I'll probably sell the 195s or 197s because I do want those shares to get called away. But then when I sell puts, I might be a little more aggressive. I might sell the $200 puts just to collect more premium. And if I end up buying shares there, then I can just sell in the money calls with those new shares I just got. But that's pretty much what I'm thinking. Probably sell in the money calls somewhere right here, and then sell some $200 puts. I could probably sell like 6 or 7 of these. Hopefully we can collect over 1,000 next week and get this portfolio back at all-time highs. So that is my plan. At the end of the day, if you go to the spreadsheet, I did take a small loss, right? My very, very first one. I don't know why it's different from the Robinhood app, but this is what I came up with. Maybe it's not including the little fees that they charge or whatever. But we're still up $7,700 in August, and we still have this week left. So hopefully, if everything goes good, we might be able to bring this to maybe 9,000 if I can swing 1,300 in Google. But still, 7,700, 5.5%. And in a month is insane to me. As long as I'm making 3% a month, I'm happy with that. So almost doubling that is still great. Have a very, very minor setback. I think it's less than 0.5% for the portfolio, but we are still absolutely killing it, and I hope to continue this. Let's go to check out how we're doing for the year. We're up 16.16%. Which is still beating the S&P 500. So S&P's up 9.5%. So we're beating the S&P by about 7% doing this in the money and cash secured push strategy. And that's what I want, right? I want to be able to beat the market. That's my goal. Otherwise, I would just buy the S&P 500 and call it a day. But and the great thing is we're beating the S&P 500 while hedging the whole time. That's crazy to me. I'm literally hedging myself. Like if I'm selling the 200 cash secure puts, I'm hedging myself $6 on Google. So Google could go up and I'll be hedging myself $6 and still beating the S&P while hedging. So that is pretty amazing to me. And yeah, I really, really, really would like to break the 25% year to date. Anything over 20% year to date, I'll be happy with. But if we could hit that 25% year to date, which we're only 9% away, and we still have 4 months left in the year. So if we can do that, that would be amazing. But yeah, just a slightly down week. Be all right. We'll bounce back. But all right, guys, that's the recap, and hopefully my Google trades go amazing next week. But catch you guys in the next one. Peace.